The broadcast is now starting. All attendees are in listen-only mode.
This is Christine Langley with the Wyoming Women's Business Center, and I want to welcome you to Understanding Your Balance Sheet in QuickBooks. The Wyoming Women's Business Center is a nonprofit organization that helps people who want to start or expand small businesses, specifically in the state of Wyoming. And we do that through three distinct programs. So the first is business training and one-on-one counseling. The second is through access to capital using our microloan program and our individual development accounts programs. And then lastly, we have a professional artist development center. So this QuickBooks training series is brought to you by our microloan program, which was started to provide access to funds for those unable to get business loans through traditional means. And so if you'd like more information on our microloan program, you can contact Waldo Smith. And now I'd like to turn it over to Cade Reynolds with Capital Clarity Company for our presentation today. Welcome, Cade.
All right, thanks, Christine, for having me. Today we're going to be talking about understanding your balance sheet, and we're going to kind of touch base and show a couple examples in both online version and desktop version. So first off, I kind of want to touch base on what is a balance sheet. So there's three major parts to it. There's assets, there's liabilities, and there's equity and capital. Assets are kind of made up of what you own. It could be what do you have rights to. So might be cash, it might be investments, etc. We'll go into that a little bit more. Liabilities, who do you owe and what do you owe on? So that could be notes payable, accounts payable, etc. We'll talk about that a little bit further in just a second. And equity is kind of your net ownership of the company, your assets plus your liabilities. So examples of assets, again, cash, that's an easy one. Accounts receivable, this is anything that you might have sold on credit. So you might have made a sale of goods and services, and then you took and you on credit and then invoice your customer for it. Haven't collected yet, but you have a right to collect. So accounts receivable there. Inventories, that would be goods and services goods that you would have in your warehouse, for instance. To say, in our example here, it's a landscaping company, so they might have some trees in the back lot that they're going to be selling soon, or pavers or something like that. Investments, that'd be if you had an ownership interest in a different company. So sometimes one company will own another company. This one you probably won't see very often, but it happens. Another occurrence of it would be if this company had interest in publicly traded stock, etc. There's some different kind of investments that a company can hold, but you don't see that a lot of the time. Notes receivable, sometimes that stems if you sold something, maybe you sold a piece of machinery and you plan to collect on it later and you issued a note, somebody has a note to you for it or something like that. Sometimes you also see notes receivable from shareholders, or owners of the company. So the company might have lent the owner of the company a loan, some money at some point in time, and they plan to collect later. Another, property, plant, and equipment, and then accumulated depreciation, and we'll see this a little bit more, but that's your fixed assets, anything, buildings, tangible vehicles, etc. Anything that's held in the company under their title. So that's good examples of assets. Examples of liabilities would include accounts payable, payroll liabilities, sales tax payable, customer deposits, notes payable. So accounts payable, this is stuff that you might have purchased from a different company. So in our example, we might have purchased a truckload of bricks from a company. We're paying them later, so we have accounts payable to them at that point in time. Payroll liabilities is generally stems from when you have pay employees and then you have to remit their withholding at a later date. That's kind of how that one comes up. Sales tax liability, that generates from sales tax collections, and you can always check out the sales tax QuickBooks videos to kind of understand that more. Customer deposits, that could be deposits that you're holding, customer might have paid up front, etc. Another deposit you might see that I didn't list here would be rent. Well, that would be in the asset side. So this is the liability side. So rent deposit. So if your customer gave you're renting to them, I guess at that point in time, you'd have a customer deposit for that rent, and that's not necessarily income, it's a liability to you to remit at a later date to them. Notes payable, again, that's if you finance something along the way. A lot of times you see lines of credit and you see term notes on equipment, buildings, etc. Examples of equity, kind of sum that up. You got stock, you got partners capital, you got distributions, which would be taking money out of the business, and then retained earnings is what the business has generated that still has held within, and paid in capital is all in and tied into stock. So that kind of is a high level of what these accounts mean, but let's take a little deeper dive here. So one second so in here, in your desktop QuickBooks, if you're to pull a report of a balance sheet and want to kind of take a look and understand what's going on in here, you would just come in and do this here. And there's a couple things you could do. You can always compare them year over year, so you could always look at, I like to do this, so I might customize it, and I would say previous period on here, and this will give us, so that month ends to this month ends. So it's always nice to kind of look at, when you're analyzing these after doing all this bookkeeping, it's nice to say, hey, Kat, here's where cash went, or here's where accounts receivable is. So it kind of is a high level. You can look for trends of where things are going, etc. Also, it's good to look for opposite signs. And let's go back to, so this one looks fairly clean for the most part, but down here in the equity section, for instance, there's owner's draw. Does that make sense that that's an opposite sign? Yes, it does, because it's a reduction. Accumulated appreciation, that's a reduction as well, so that makes sense to me that that'd be opposite sign. But stuff like that stands out, let's kind of take a high level peek at it and make sure that that's good. But let's go to the QuickBooks Online, and I have in here, I want to show you a balance sheet and that has a couple errors in it, and kind of a way to start navigating to fix it. So let's just say that this is last month, and I'm going to run this. So a couple of things. I was talking about the opposite side here. So like when I'm analyzing this report at a high level out of QuickBooks, I'm going to say, why does accounts receivable have the wrong sign on it? So in order to figure that out, a couple of ways you can do it. You can always click into any of these accounts and see the detail of what's been added into it, what's been subtracted out of it. But for this one, I want to go back and I want to look at a different report, because it's going to give me the detail of it. So we're going to go back and we're going to look at the accounts receivable aging summary, and notice that within here, Jalopies has a big wrong sign balance. So that's making up part of this. So if I make this for last period, last month, to make it correspond to the balance sheet, this number would tie to the balance sheet. But let's drill in here. So we're gonna click on this, and then we're gonna say okay, and then to drill in even a little bit deeper, we're gonna say, all right, so what I did in error here that I just found by looking into this a little bit deeper is I had typed this in as $8,100 instead of $81. So to fix that, you would just change that to 81. That would all shake out in your cash reconciliation too, but that's another. So we would want to say yes. Now that's paid for the right balance, because I really didn't pay the guy $8,100 in this scenario. We've only paid him the 81, and is this an error? So now we'd be able to go back to our balance sheet and look at it to see that now accounts receivable looks a little bit better. And this year, our last month, I'm going back to it. So now we can see our balance sheet again is sitting at the correct balance. It's not off stated there. So undeposited funds, that's a different account. But another one down here, accounts payable, that's the wrong sign right now. So we'd go through the same case, and we'll talk a little bit more about the accounts payable aging summary, but we'll do that here in a second, so in a different video. So that kind of sums those up. And Again, you just want to look at high-level trends of what's going on. You want to say, hey, I actually know I owe all these things. I know I have this much equity in the company. I know I have this much in assets, and that's kind of the biggest thing with understanding these reports. So you'll get more familiar as you go. We're going to go back to the PowerPoint, and I'm going to turn it back over to Christine. Thank you for having us, and we look forward to more.
Thanks, Kate. So the Wyoming Women's Business Center is made possible through several partnership agencies, and our primary funding comes from the U.S. Small Business Administration and the Wyoming Business Council. And so we're thankful to their support and our other supporters. If you have questions and you'd like to contact the Wyoming Women's Business Center, our contact information is on your screen. And we have a variety of business counselors that can help you. If you're interested specifically in the microloan program, please contact Waldo Smith. And thanks everybody for joining us today.